Well, you gotta be flipping my flapjacks. I have gone broke again. Yes, you heard me right. Gone broke again, folks. The short sellers have won. The haters have won once and for all again in this battle of the tattooed chef. What is going on here? We gotta talk, okay? Stock's going down. Company missed earnings. I'm hearing a lot of conflicting things. Some people saying they missed by 10 mil, by 20 mil. Some people saying it's going to go down 30% tomorrow. Okay, so we're going to separate what's real here, what's the FUD. Yeah, man, we got a lot to talk about in regards to this chef. This is a chef dedicated video, and short sellers go out and celebrate tonight. Pop a bottle for me, and you guys are geniuses. So smart. Okay, so anyways, guys, I appreciate you joining me. As always today, I can't even show my face. I'm so broke. I can't afford that much cloud space, man. It's unbelievable. So where I want to start out here today is I want to talk about this company, Monster Energy. It used to be called Hansen's Natural Beverage. And, this is a company that was one of the best stocks from 2000 to 2020. And this was a stock I was fortunate enough to take part in and made some really good money in it. And the reason I want to bring this up is, let's look here. 2012, Monster shares fall after third quarter profit misses forecast. 2011, Hansen's Natural, that was Monster, that's what their name used to be. Hansen's Natural Q3 profit misses estimates. Wow, they missed numbers there too. Wow, 2010, Hansen's Natural misses EPS estimates. Stock down 8%. Oh man, this company is garbage. Hansen's Q3 results miss estimates. Share fall 2009. Oh my gosh. You're telling me this is one of the best stocks of that 2 decades? Hansen drops on missed Q1 expectations 2008. Hansen's Natural Q3 misses view 2007 shares sink. My gosh, what is going on with this company? Hansen's overheated 2006. Look at this. Stock is overheated, they were saying. Oh man, okay. And I show you guys that because even growth beasts miss estimates, and this company missed estimates, and we'll run through the numbers. There was about a $4 million miss on revenue, so they missed, okay? And I like it when my companies beat earnings. Now, the only good news is we know if a company beats earnings in this market, usually your stock goes down. So I'm expecting Tattoo Chef to actually go up tomorrow because, I mean, what the heck? They missed earnings, so that means your stock price goes up, right? So anyways, the moral of that story is, if you miss an earnings, it's not the end of the world. You can still be a beast over time. And you can look at pretty much any stock out there, and they miss earnings. It happens, okay? I love my companies to beat earnings, but not every single time it's going to happen, okay? So stock price is obviously making a downward move after hours here, down 7.93%. 8% roughly. I've seen it down as much as a little over 10%, seen it down as little as 6% after hours. First off, who's selling after hours? I'm really, really curious of that. We're going to go through the numbers. We're going to go through the details here. But I'm curious, who's selling? Really, who's selling after hours here? Because I can tell you it's surely not the long-term investors. As a long-term investor, there's nothing in these numbers we're about to go through that makes me say, oh, gosh, I got to run for the fences in this one. Get out, get out, get out. Sell. I mean, where's that at here? This looks like a little short-term trader money, hoping they would beat, the stock would pump, maybe make a little money. Now they're selling at 1870. I don't know, man. It is what it is as far as that goes, okay? So look at the numbers here. So revenue came in at 50.7 mil. That missed analyst expectations by almost $4 million. So very, very important to keep in mind there. It's also important to keep in mind that's a 45.9% increase in revenue compared to 34.8 mil in the prior year period. Tattoo Chef branded product revenue came in at 33.1 million. That's an increase of 62.3% or 20.4 million. Now, this is the most important number, the branded products, because basically they have a private label business, which they sell to Whole Foods, Trader Joe's, and a few others. And they're trying to kind of get out of that business. It's a very, very low margin business, very, very low profitability there. And the company's whole focus needs to be on the actual Tattoo Chef branded products, which is what we're all jacked up about and the reason I'm in this stock, right? I care less about their private label business. Cool. If they got out of that 100% over the next couple of years, I literally don't care. That's fine with me. I want them to continue to increase the actual Tattooed Chef branded products. So that revenue is up 62% year over year. Gross profit came in at $8 million, or 15.7% gross margin, compared to $3.7 million, or 10.8% gross margin for the previous year period. So they over doubled up gross profit as well. Now, in regards to me, gross profit, EBITDA, loss, income, anything like that in the short term, I do not care about that. That stuff is all going to take care of itself in the end, in my opinion, by far. So other people can get caught up and they'd be like, gross profit was this number, the net loss was this number. For me, that makes no difference in the short term. For me, this is all that matters in the short term. Talk to me in a few years. Gross profit will matter. The income or loss will matter in a few years. But for right now, it's all about store expansion, SKU expansion, revenue, and specifically revenue of the branded products, up 62%. Okay. Net loss was $53.2 million, but very important, that takes into account a one-time non-cash expense of $46 million, resulting from a valuation allowance on a deferred tax asset due to additional investments. It's a very, very important number. So the number seems ridiculous, but it's a one-time expense there, okay? Adjusted EBITDA was negative $5.9 million compared to adjusted EBITDA of positive $2 million prior year period. Adjusted EBITDA is a non-GAAP financial measure. This is very, very important. So last year they could have just thrown some, one-time gain in there, something like that. So, the numbers, as far as top line, I would have loved them to beat the numbers. I would have. I don't like my company's missing numbers. I'll be very, very clear about that. So I'm disappointed they missed. But I'm also happy to see branded revenue was up 62%. So kind of a bittersweet earnings there. And these numbers, I'm not tripping off any of those in the short term. It's a food business. They will be incredibly profitable long term, in my opinion, the way they're building out this brand. It's not even a question. Some folks are going to look at the gross profit or the loss numbers and be like, oh my gosh, it's a money-losing business. Look at every company that has been a beast, and they almost all lose money when they're in their early stages. Every single one. And I was even talking with somebody, oh man, when was this? It wasn't that long ago. Tesla shareholder, and they were talking about a tattoo chef's losing money, and I'm like, as a fellow Tesla shareholder, you do realize how much money Tesla was losing just a few years ago, right? Businesses can change things very, very quickly as they ramp and they scale. These are very, very important things to keep in mind. Every business, when it's young pretty much nowadays, loses money in the short term. And as long as they keep that revenue growth up and they reach their scale, the profits are immense, right? But you got to kind of get to that stage. Look at the cash position here. Cash position came in at $140 million. This is not some huge market cap company. It's a $1-something billion market cap. So $140 million in cash and cash equivalents, this company is in the cash position to basically expand this business as they wish over the coming years. And I honestly don't even think they really need to raise money. If they want to raise money, they can. They obviously have that ability. But I'm just looking at the numbers here, guys. I don't even see a need for the company to raise money if they don't want. And keep in mind, also on top of that, I think there's a possibility, I would call it 50-50, that the company ekes out a very, very small profit next year, which just kind of goes to kind of show you, like, I don't think this business is going to burn cash forever. And so this is very, very important. If they do lose money next year, in my opinion, it's going to be an extremely small amount. Extremely small amount. So essentially, this company is in a great capital position to continue to expand this business in a massive way. As far as the outlook for the company, very, very important here, okay? Revenue, they're expecting to range between $235 million and $242 million. That's an increase of 58% to 63% compared to 2020. This guidance implies 49% year-over-year growth on the base business to $222 million and a $13 to $20 million contribution from one of two facilities included in the Foods of New Mexico acquisition. The company does not expect the second facility, the Karsten facility, to have a material impact on 2021 revenue because of the timing of equipment being installed during the fourth quarter. Very, very important to keep in mind there. Gross margin is all over the place, right? Gross margin is expected to range between 16% and 22%. That's why I'm not even, tripping off of anything around gross margins in the short term, EBITDA, loss, income, any of that. because the business is in such a scale mode right now that it doesn't matter. Literally, like, none of that matters in the short term. In 2 or 3 years, it's all going to matter. But right now, it's just the business hasn't scaled enough right now. They're getting in all these new retailers. There's so many moving parts. It's like, what retailer, gets a big shipment in? Is it like a Costco or Sam's Club where maybe the margins are lower? Is it more like a Kroger or a new food store, right? You have all these moving parts. So when you see that wide of a range of gross margin, right there, 16 to 22%, keep in mind, this is a business that is scaling right now. It's going to move around. I am fully confident this company is going to have 20 to 30% gross margins long term. There's no doubt in my mind at all they will get there, but it's going to take a while, okay? Adjusted EBITDA of negative 14 mil to 17 mil. The company is committed to an aggressive plan of growing its brand through an extensive marketing and promotional spending that has already produced significant revenue growth in both grocery and mass retail. To augment the revenue growth, the company has invested in its staff and infrastructure, equipment, brand visibility, and customer acquisition costs to meet the marketplace demands and the company's current and future goals. The company also continues to be impacted by increase in logistics costs, storage fees, legal and accounting fees, and marketplace shortages in packaging products. Capital expenditures are expected to be in the range of 15 to 20 mil. Now, in the short term, this is something that's eating into everybody's profitability. Logistic costs, storage fees, containers, even packaging fees and things like that. Everything is just, we're in inflation mode right now. This will not last forever. I can promise you that, okay? But we are in this cycle for right now, and it's hurting a lot of companies' profitability. It's putting some big headwinds on for a ton of these companies, even a Tattooed Chef, right? We also saw it with Corsair Gaming when they reported last week, and almost every business that you got to ship product and you basically have logistics, like, it's all essentially hurting profitability. And so it's a huge short-term headwind. But guess what? Short-term headwinds are just that, short-term headwinds, and then they turn to huge short-term tailwinds. And so next thing you know, all of a sudden a year from now, when all this starts cooling down, all of a sudden Tattooed Chef goes from these headwinds hurting profitability to, at the same time, they've already scaled the business to much bigger revenue numbers, and then you get the tailwinds come in from logistics costs calming down and these storage fees and containers and everything, right? All of a sudden calming down, and all of a sudden you have a huge tailwind to the profitability of the company, and so you kind of get like two things working simultaneously at the same time to boost up profitability. These are some very, very important things to keep in mind that I don't think a lot of investors even take into account, okay? Now, right here, this is so key, guys. Branded sales increased 62% to 65% of total revenue. There aren't a heck of a lot of companies out there that are and this is really their core business, right? They're branded Tattooed Chef products. There aren't a lot of those companies out there that have those sorts of numbers, 62%. I mean, name one other food or drink company that is increasing their branded sales 62% right now, or anything close to that. I'll wait. There's nothing, okay? Not that I know of, at least. I mean, I've looked into a lot of dang food and drink companies. I can't find any that are growing even close to that. This company's on a whole different scale of growth. So at the end of the day, when Wall Street comes to this one more and more over time, they're going to look at it and they're going to say, okay, where can I get this sort of growth? And you can't get these sorts of growth numbers anywhere else out there, just flat out. It's on a whole different scale. And this is a company that should do, let's see where the numbers line up this year, 230, 240, $250 million of revenue. Next year, 300 mil plus. As the business scales more and more, as I spoke about recently, it's going to be more and more analyst attention to the stock. More and more of these numbers are going to be reported. And I think Tattooed Chef's putting them in a position where they're going to be able to beat numbers kind of moving forward. And I think that's very, very important, okay? Now, this is very, very important to keep in mind here, okay? Market cap on this one was $1.66 billion here today. As of tomorrow, who knows where it's at? Maybe it's on 1.5. We don't know if this stock's going to be down 8%, 6%, 10%, 12%. The short seller is saying it's going to be down 30% tomorrow. Okay, I'll back up the truck. That's all I'll say about that, okay? This is a small market cap company. There's no doubt about it. And when you think about the scale this company is going to be able to reach over the coming years, that's what excites me so much about this. Yeah, I hate that they missed numbers. I would love if they blew out the numbers today, but they missed, okay? But at the same time, branded sales are up 62%. Am I going to cry myself to sleep because they only grew branded sales 62%? I mean, that's an incredibly impressive number. So I'm looking at this, and I will gladly be a buyer of this stock tomorrow. If it's down more than 5%, I will be buying this stock. If it's down 10% plus for any reason, I will be buying heavily this stock. If this stock somehow is down 15% plus and I'm awake, I will load the boat on the stock, okay? Flat out. I actually don't mind it falling at all. I told the private stock group before, the earnings came out today, I said, I want the stock to either go up huge or down huge. The last thing I wanted was the stock to just do nothing. And it's like a 2% move one way or another, 2% up, 2% down, something like that. So we'll see. I don't know what to expect tomorrow. This is probably a little Wall Street money, the little bit of money that is in the stock of Wall Street money, and some short-term traders. As far as tomorrow, I don't know. I wouldn't be shocked if the stock wasn't even down huge tomorrow, because at the end of the day, I know there's definitely a lot of money on the sideline when it comes to Tattooed Chef stock. And a lot of folks that were kind of waiting to see these earnings and just kind of waiting on the sideline like, let's just see what happens here. Maybe the stock drops. And we've seen a lot of stocks that have beat earnings still go down. So I think there's definitely a lot of money on the sideline kind of looking at this and like, I don't know, because even if they beat numbers, the stock still might go down. And so, don't be surprised at all if some of that money jumps in. I'll probably likely be buying tomorrow. My hope is the stock stays down into the 2024 calls coming out in September. I'm not going to hold my breath on that because at the end of the day, it might not, right? Also, very, very important to keep in mind here, just a few weeks ago, the stock was in the $18 range. So, I know the short sellers are popping bottles tonight and super happy the stock's going down. But to the shorts, keep in mind the stock was just in the 18s a few weeks ago. So, I don't know if that's a big victory for them. But, it is what it is. That's all I'll say about that. So, to reiterate, all my long-term bullish thesis in the stock is intact. I am disappointed they missed on revenue. And but my bullish thesis long term is still intact. At the end of the day, you look at those numbers and name me some food and drink companies that are public companies that are growing revenues at those type of rates. You're not going to find it. And so yeah, I love this one for the long term. It is what it is. I'll gladly be a buyer if this stock is down in any meaningful way tomorrow. Much love as always, guys, and have a great day.